Hey traders, it's John Fortune here with this week's weekly Forex forecast. Hope everybody's having a great weekend. Next week we have US CPI inflation data coming out, and that is going to be a piece of data that really drives and dictates markets next week in all probability. So don't be surprised to see the dollar pairs pretty much going nowhere, and you may find all Forex markets pretty much doing nothing until that inflation print next week out of the US. Okay, so quick look at the economic calendar heading into next week because there are a couple of important things to pay attention to. We do have on Monday, bank holiday, of course, continuation of the Easter holiday. And on Wednesday, you can see the all-important CPI data out of the US. And we also have an interest rate decision out of Canada. So we will look at Canadian interest rate decision plays next week, but just be prepared, not just the CAD pairs, but all Forex markets may just do nothing into the CPI print and into Wednesday. I do think Wednesday onwards is when we see most of the opportunities coming into the markets overall. And apart from that, we do have some preliminary consumer sentiment, some retail sales, but those are the two pieces of data which I do think are going to drive markets and market opportunities next week. Okay, so looking at the scores going into next week, and what you can see is the Aussie and New Zealand dollar have strengthened somewhat in the scorecards, and the US dollar has slipped down the scorecards, and it's outside the bounds of +2 and -2. So between here, these markets are kind of bullish to neutral, bearish to neutral. But once we get past -2 or +2, we do have substantial edge in trading those currencies to the upside or the downside. And going into next week, what's interesting here is the Aussie and the US dollar are the two weakest currencies. And in terms of the majors, this is kind of a Goldilocks scenario. Now, I don't think that's going to last very long. And I do think the bigger risk is for risk off coming into the markets. I'm not talking about just Forex markets, but also that would be stocks to the downside, commodities to the downside in Q2, which we've just entered into. But perhaps for the next week or so, we do get a little bit of Goldilocks or a little bit of stagflation plays before we get real risk off coming into the end of April, May, and also June after that. So going into next week, I am going to be interested in pound long positions and also Swiss franc long positions. And we can also look at JPY long positions, as this is third in terms of best long plays next week. And to the downside, we do have the Canadian dollar, but we can look at this as an interest rate decision play because the Canadian dollar pairs are unlikely to do anything into Wednesday. And then we'll likely get moves from Wednesday onwards. And in terms of Aussie shorts and US dollar shorts, we will be looking at these as well. I do still favor Aussie shorts overall, but pound Aussie to the upside, which we looked at last week and went right into its target area. Pound dollar to the upside, pound CAD, which also is something could be looked at in terms of an interest rate decision play next week. And also Aussie franc to the downside, Aussie yen, US dollar franc to the downside, and US dollar yen I do like as well because they would also potentially perform in risk off if that were to come. So those are the markets we're going to be looking at in today's video, primarily Aussie and US dollar shorts, but also Canadian interest rate decision play from Wednesday. And we'll be looking at trading that on whether we get strong or weak data from the BOC. And to the long side, I do like the pound, the Swiss franc, and the yen, but I do prefer these a little bit, the franc and the yen. Even though the pound is stronger and has been performing the best, as the scorecards have been suggesting, I do like the risk-off nature of the franc and of the yen, whereas the pound is not really a risk-off currency. In risk-off, it does move up against the Aussie, against the Canadian dollar, against New Zealand, but generally it will move down against the others. So we'll be looking at these three currencies here to the long side primarily, and these three currencies here to the downside for the best potential setups heading into next week. Okay, so let's have a quick look at the individual currencies before looking at the markets themselves, starting with the US dollar index. And you can see in the US dollar index, we're on the weekly chart here, just looking at the bigger picture. If we scroll out, we have a couple of previous highs that we've broken through and we've pulled back and retested. So we could very easily be coming down to the 100.39, retesting this area over the next couple of weeks before finding a bottom in the DXY. But it does look like we are heading back to the highs, in my opinion, on a recession and flight to safety at some point this year, perhaps later on in the year. But as it currently stands, we're still in this corrective phase in the dollar, retesting the prior highs as broken resistance looking to turn support. And you can see here on the weekly chart, it is actually this low and this high which we're currently ranging between. And in fact, if I take this, I put this on the previous high over here, this is where you get matching ranges from history. So you see historically, here's a high, here's a low, and now you can see price bouncing between this range. So I would not be surprised to see it come down, test the range in the near term. Again, perhaps the 139. And that near-term weakness is something which is being projected with the scorecards as it currently stands, and that dollar weakness. However, what I would say is the CPI data next week out of the DXY, we can treat that almost as an interest rate decision trade. And I think we're going to get better opportunities from Wednesday onwards after CPI takes place. And of course, when you have big pieces of data coming out, that can actually change the scorecard. So it is going to be important waiting for that CPI print next week. Next is the euro. Now the euro is also ranging near term. And again, I wanted to show you this on the weekly because if we scroll out here, what we actually have here is we have a major breakout. Here is a lower high, here's a high, and we broke through here and we've pulled back. And as it currently stands, I just view this as a near-term correction consolidation, retesting these levels, breaking back above this level, but retesting this level. And the risk is in the near term for this to start to break back down, heading down towards the lows again, most likely, in my opinion, on a recession in the US and a global recession. As it currently stands though, the question is, does the euro start to roll over to the downside, or do we come up and test this high, which is also very likely and would mirror, that test perhaps of the Kiev broken resistance highlighted just now in the DXY. So we could very well be coming up to here, and as it currently stands, that would be something that I would be looking at, this near-term strength, because we're still seeing in the scorecards a weakness in the dollar, and that should support the euro near term. Next is the pound. Again, in the weekly, you can see we pulled back. We had an A, B, and a C, and we've tested the high. So the big question here is, do we have the start of a third wave? Because above the 1.2442, where we've broken this high, and if we drop down to the daily chart, you can see this a bit easier. You can see this is actually the inverse head and shoulders breakout here in the pound. And so the question becomes, when you get this, you can see this kind of rally and then a consolidation, A, B, C. And when you have this break now for this inverse head and shoulders, the question is this the start of the next leg up? Or are we going to see a failure here? And very often those failures take markets back down towards their prior lows. Now, if your view is, as mine is, that we are likely heading towards a recession in the US and globally, that supports the failure of this inverse head and shoulders breakout. And we've already seen that inverse head and shoulders failure breakout in previous videos in the S&P 500. I do think that's what we're going to get. Yes, we could push a bit higher next week, and certainly the pound versus the commodity currencies like the Aussie, I would be looking for relative outperformance. But in the pound itself, this is interesting now that we are at a decision point where either we go higher and we get the next leg up, or we start to fail and come down. And again, my view is over the next couple of weeks, we're most likely going to fail and start to head back down towards the lows in the pound. Next is the Swiss franc. Now, this is a market I've been tracking since the beginning of the year, and I did say to you, my 2023 currency was Swiss franc to the upside, perhaps to 1.17 is the overall target this year that I was looking at. I highlighted the double bottom breakout, we retested it, and now we've started to break above the previous high. So definitely interested in Swiss franc long plays, especially versus the Aussie. I am also interested in US dollar franc as well to the downside. Next is the yen. The yen is kind of consolidating. If we broke above this high and above the major breakout level here of the 0.00790, if we break it with momentum, that would actually be quite a significant inverse head and shoulders break here. And if we zoom out a bit, you can see that this was in the Japanese yen. This was the major breakout of the low. And even if we are going to head lower, you can see a scenario where the Japanese yen near term starts to pull back and at least retest this even if we're going to head lower, at least retest this and the previous high. So I do think we see some near-term Japanese yen strength technically. We do also have Kuroda handing over the reins, and I don't think we're going to see the scrapping of yield curve control straight away. I think that may take a bit of time. And I do think there's a little bit more upside near term. Next is the CAD. The CAD has shown some near-term strength as we got that production cut from OPEC. We saw crude oil gapping up and the Canadian dollar has benefited, but overall this is bearish. Whether we come back up and test this for an A, B, and then a C up here and then start to roll over, or whether we just start to roll over in the near term and come back down to the lows. Either way, I do think the Canadian dollar is heading back to the lows. In terms of next week, I prefer Aussie shorts and also even dollar shorts. And I think because of that cut by OPEC, this is no longer a very, very good sell, and it's not a fantastic buy. And I think unless we get some direction off of that BOC interest rate decision next week, this is going to be a market not worth trading. But I am looking at a number of Canadian dollar plays next week, whether we get bullish or bearish price action, based on that interest rate decision. There are going to be opportunities to play that both ways next week. Next is the Aussie. Ever since we took out this previous high, we've been looking for this to come back down to the lows. And again, I said in previous videos, although nothing has really happened since March, you can see we've just been consolidating in the daily. Not really much action going on here. It does look like we're starting to break out of this. And once we break this, I do think we are coming back down to the lows, as I've been saying for a while. And as I said in last week's video, I do think these lead the other currencies lower. So yes, we start to see the Aussie selling off first, and then I think the pound, the euro start to follow suit as the dollar starts to find a bottom in the near future. And finally, New Zealand dollar, again, another currency where not much has been happening recently. It's just been chopping around, but I do think this resolves itself to the downside overall, back down to the lows as we've been discussing. And what's interesting here is this reflects almost exactly what we were looking at in the Swiss franc. Do you remember? We've got this double top, we chop around, we break the low, we start to chop around and then start to sell off. Just like in the Swiss franc we just looked at, we had that big double bottom, we broke the high, we chopped around, and now we're back up in this area. Looking to break above the high and start that next bigger leg up. So I do think we are heading down towards the lows in the New Zealand dollar, and this is going to coincide, in my opinion, with the DXY rally into new highs. However, going into next week, the dollar itself is quite weak. So I do still favor dollar shorts versus the safe haven assets, as well as Aussie shorts versus some of the safe haven assets and the pound as well. Okay, so let's have a look at the markets on my watch list heading into next week, starting with crude oil. I cover crude oil every single week, and I am neutral on crude oil. I don't have a very strong bias on crude oil one way or the other. It's very corrective. And in the commodity scorecard, it's actually slightly bullish to neutral. So in terms of crude oil, you can actually have both the upper and lower bound here. You can see the 76 handle, which essentially is a gap close, and the 84 level to the upside roughly. So you have two ways of playing this. If you're looking for an intra-week opportunity and this starts to flag and then break higher, I would be looking at a max profit taking opportunity roughly at the 84.50 area. But if this pulls all the way back and closes the gap, there may be an opportunity for a near-term bounce from these levels down here for a short-term buying opportunity. But overall, I am looking towards the upper bound on balance here. And again, that would be a max profit taking opportunity that I would be looking for to the upside, because above here, you start to have the odds turn against you that these markets are going to move higher. Next is pound Aussie. This was a market highlighted last week to the upside, and we did pull back, and you can see we rallied right into the max profit taking area. And as soon as we tested this, that was done for the week. So coming into this week, I am looking for potential long opportunities in pound Aussie. Just bear in mind, because we took out the max profit taking target, this probably needs to correct and pull back first. So don't be surprised. Markets don't move in a straight line. They're not going to take out the target and then next week take out the target and next week take out the target and then next week take out the target. That's not how these markets work. They take out the target, then they consolidate, and then they run up and take out the target. And then they consolidate and pull back, and then they run up and take out the target. So don't be surprised some weeks just to see a couple of these markets correcting if they took out their targets last week, that is the opportunity. Even if it just corrects a week, that is the opportunity to start to look for longs if these stay in the scorecards. And I'm going to be looking up towards the 1.88 to 8850 area. Next is Aussie Yen. Now, Aussie Yen is my second favorite market that I'm going to be looking for potential short opportunities in. And of course, you don't need to trade every single one of these markets. They're on the watch list, so you can grab a handful of trading opportunities, good setups each week. But in terms of portfolio selection, Aussie Yen is my second favorite market next week. Any pullback in this market is viewed as an opportunity to look for shorts. And whether you book profits intra-week or this comes all the way back down to the previous low, this would be my max profit taking area at the 86 to 86.50. Next is Aussie Franc. As you can see, Aussie Franc came down right into the max profit taking area at the 0.602 to the 0.604. So going into next week, I do favor this to the downside once again, but just bear in mind, once you get into these areas, the odds of declining further, it can do it, but it's about 3 out of 10 that you're going to break much lower. So this is why these represent the perfect opportunity if you are short to book profits for that week. So again, we've taken out the target. Don't be surprised to see this correct first. Give this some patience, allow this to pull back, and any pullback is simply viewed as another opportunity to reload any shorts down towards the 0.5940. So moving on to the dollar pairs, starting with US dollar Swiss franc. Now you might say, well, why not pound dollar? And again, it's because the Swiss franc and the yen are risk off. They're slightly more risk off. US dollar Swiss franc is kind of similar in terms of risk off. They're both fairly evenly matched. In fact, the dollar is maybe slightly more risk off. But going into next week, I would rather be short US dollar franc or US dollar yen. And if risk off comes in, you know, they are not going to snap back like pound dollar would. And we looked in the pound itself, how it's right at that area now where it could start to reverse for that major inverse head and shoulders breakout failure. So I personally prefer US dollar franc, US dollar yen, sticking with some of those more risk off setups. Any pullback in this market is going to be viewed as an opportunity to look for shorts. And I'm going to be looking down towards 0.8940 area. The next dollar pair I like is US dollar yen. Now the yen is more of a risk off currency. So maybe even US dollar yen. I've put US dollar franc first because of the scorecards, but US dollar yen is maybe even just as good, if not slightly better than US dollar franc. So any pullback in this market would be viewed as an opportunity to look for shorts. And you can see we're already correcting, consolidating. And I'm going to be looking down towards the 1.2950 area. This low sits right in the max profit taking area. So this low would be a great opportunity if you are short to book some profits towards the end of the week in this market. The next dollar pair we're going to look at is pound dollar. Now, US dollar franc, US dollar yen, pound dollar, and euro dollar, all of these markets, I am looking for potential dollar weak setups. So that would be pound dollar to the upside, euro dollar to the upside, US dollar yen to the downside, US dollar franc to the downside. But if we get a reversal on CPI, let's say CPI comes out very unexpectedly hot, we get some real dollar strength, it would be Aussie dollar to the downside. That would be my plan B currency pair that I would be going to look for that dollar strength. Why? Because the Aussie is actually weaker than the dollar in the scorecards. So if the dollar gets some strength or we get a bullish catalyst for the dollar from CPI, I don't want to go long the dollar versus another strong currency. I want to go long the dollar versus the weakest currency. So these four markets here represent my plan A, which is dollar weakness. But if we get an unexpected bullish catalyst on the CPI data, I would be looking to represent those dollar strength plays with Aussie dollar shorts. So pound dollar and euro dollar, I don't like these as much as these two, which is why they're not in gold. My 1, 2, 3, 4, 5 top Forex pairs next week are these 5. And in terms of pound dollar, any pullback in this market is still viewed, although I prefer the other markets here, it is still viewed as a potential opportunity to look for longs into the 1.2550. Now again, although the pound is stronger in the scorecards, I'm a little bit wary of the fact that the pound itself has just broken a major inverse head and shoulders breakout, and I do not believe that is going to sustain itself for too much longer. Next is euro dollar. Last week we traded right into the max profit taking area, and look at the sell-off we got once we traded into this. You can see the odds against you for any further upside. Coming into this week, any pullback in this market, and again, if you want to be on the safe side of things, you can wait until after CPI. If this market just consolidates and then you get a nice momentum rally and you start to flag like this, I would be looking up towards the 1.1050 area. And the final dollar pair is Aussie dollar. Now, I'm not going to be trading Aussie dollar at all next week unless we get a bullish catalyst and dollar strength from CPI. This allows us to be reactive, because if we're looking for dollar weakness and we get a bullish catalyst, well, then you can either do nothing for the rest of the week, you can trade the dollar against that catalyst, which is a bad idea, or you can pivot to a plan B setup where you can trade that dollar strength against a weaker currency, which would be Aussie dollar. So if we start to consolidate in Aussie dollar and the CPI data comes out and you get a stronger dollar and Aussie dollar does this, I would be looking for potential shorts down towards the 0.6560 area, and this low right here would be a good target to the downside in Aussie dollar. Okay, so the final Forex markets we're going to look at are the CAD pairs. Pound CAD and CAD franc are the two markets I would be looking for from Wednesday onwards if we get CAD weakness, and Aussie CAD and New Zealand CAD would be the plan B setups if we get CAD strength unexpectedly from the Bank of Canada on Wednesday. So in terms of pound CAD, any pullback in this area, if we get the BOC on Wednesday causing CAD weakness and we get a rally to the upside, this would be a market I'd be looking for potential bullish setups post the BOC on Wednesday. I'm going to be looking up towards the 1.6950 area. Next is CAD franc. Now, if we get this market pulling back and consolidating, as is usually the case before an interest rate decision, what I'd be looking for is any break lower like this, so we get a bearish catalyst from the BOC and we start to see a sell-off in the CAD. I'm going to be looking for any post-interest rate decision setups down towards the previous low at the 0.660. And the final two Forex pairs here are Aussie CAD, New Zealand CAD, and these will be on my watch list, or they are on my watch list, in the event that we get a bullish catalyst from the BOC. So what does that look like? The market consolidates into Wednesday, as is usually the case, and then we unexpectedly see, which is not my base case, by the way, my base case is for CAD weakness, but as a plan B, as a backup, let's say we're wrong on that and we get a sell-off to the downside because we get CAD strength. This would be the market I'd be interested in shorting that weaker Aussie into the 0.8900 area. And last, and in many ways least, to be honest with you, because the New Zealand isn't as weak as the Aussie, it would be New Zealand CAD to the downside I'd be interested in. We did trade right into the max profit taking area last week, and look at how that held. Coming into this week, any pullback in this market, and I expect this market to chop and consolidate into Wednesday. If we then get a bullish catalyst unexpectedly from the BOC, you're likely to see a sell-off like this, and any flag or pullback would be the opportunity to look for a follow-through trade down to 0.8360. But I do prefer Aussie CAD to the downside in that case, because the Aussie is actually scorecarded as being weaker over the next 4 weeks. Okay, so wrapping up the video with gold, silver, and Bitcoin, as we always do, you can see the gold-silver ratio really trending to the downside. I do favor silver longs over and above gold longs, but as the dollar is still weak, I do favor both gold and silver to the upside, and even Bitcoin, because a weaker dollar will support all three of these to the upside. The only thing I would note is if we get a strong bullish catalyst for the dollar with very, very high inflation print, relative to what's expected or what came out previously, then it does make gold, silver, and Bitcoin longs not as attractive next week. And it may be the case that any bullish catalyst in the dollar next week gives the pullback in these markets to start to look for longs once again. And you just may need a bit of patience trading these to the upside if we get a strong dollar from CPI next week. So starting with gold, gold was highlighted to the upside as an opportunity to look for last week, and we did trade into the max profit taking area. You can see that capped gold, and if you had booked profits in that area, especially at the top of this area, that was pretty much the max profit taking opportunity last week. Coming into this week, any pullback in gold, and with CPI coming out, I do actually favor gold and silver to the upside over and above the Forex pairs. I do think these actually represent better long plays than even US dollar, yen, and US dollar franc. If we get bearish dollar, I think gold and silver are actually better plays than even the Forex trades. So any pullback in this market is viewed as an opportunity to look for long setups. Bear in mind, we traded into the max profit target opportunity last week, so this is likely going to correct and consolidate. Again, markets don't always move in straight lines. In fact, they never move in straight lines. So don't be surprised to see this pullback first, but any breakout would be viewed as an opportunity for another run into the 2060 area. Next is silver, another market here highlighted to the upside and took out its max profit taking area last week. And if you book profits right here in this area, that was pretty much the best you got. This consolidated, sometimes they sell off quite hard from here, which is why I look at these as max profit taking opportunities. So any pullback in this market, and especially as we traded into the max profit taking area last week, I would not be surprised to see this consolidating first. So patience potentially required in this next week. Any pullback or consolidation is viewed as another opportunity for a rally up towards the 26 level. And I am going to be bullish silver and gold unless or until we start to see the DXY reversing to the upside in the scorecards. And last but not least, we have Bitcoin. Now, Bitcoin is just consolidating sideways, and it has benefited from a little bit of liquidity recently. I don't think Bitcoin is a fantastic market as it currently stands because it's doing nothing and then it's having these wild moves. It's becoming a little bit less predictable than it was back in 2021-22. So I much prefer silver and gold to the upside. But if you are looking to trade Bitcoin, I would be looking for any break higher as the opportunity starts to look for longs into the 30,000 and the 30,500 area. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.